So let's connect with the CEO, Saugata Gupta now joins us. Saugata, good morning. Thank you for joining us. Whether it is in the hair oil category or the edible oil category, Marico has managed to make Parachute and Saffola as really the key market leader brands in this category.
I think from the beginning we have been choosing segments or categories where we believe that it is not only having high market attractiveness but a right to win, create positions of differentiation and having the ability to actually play across the spectrum in the category. I think there is always the advantage of being being a leader. In fact, in 90% of our segments where we operate in our portfolio, we are number one. In 96% of the segment, we are either number one or number two. And there is a price of leadership. We believe in focus. We believe in operating with what we describe as blue oceans rather than avoiding red oceans. For example, we'll never enter into a category which is dominated by 3 players already with high penetration and having 80% market share consolidated. So I think it's a question of choosing our categories, choosing few categories, doing it well, I think having the focus and also having the willingness and the patience to actually, ensure that we price it right, get leadership. I think one of the things which we have been focusing on over the long term, we choose volume over short term margins. And lastly, I think what helps us is that some of the categories we believe we have far more stronger insights and cost structure advantages.
Right. India, is a country with demographics that are ideal for a consumer company like you. We're younger, agile and have rising disposable incomes as well. So how is it that you would look at this opportunity and that India presents vis-a-vis any other country globally?
I think we operate in only emerging markets of Asia and Africa, and the reason is we operate in countries, and which is very specific to India, is countries where a lot of categories have enough headroom for growth in terms of penetration. There is a young population compared to a lot of developed markets or some of the other markets in Asia which has an aging population, means the potential being low. We also like countries which are organizing and rapidly going transformation. Transformation can be in digital, transformation can be in the way of people looking at distribution. And I think so I believe that the demographic dividend is a very, very big plus for India. Having said that, demographic dividend has to come with growth in disposable income, growth in infrastructure, and the fact is that I think India and some of the other markets, like I think we are very excited about Vietnam, we are very excited about Bangladesh. These are the markets which have tremendous potential for growth.
Right. Saugata, in your recent analyst meet, you've spoken about 8 to 10% volume growth in the balance of FY18, but you've remarked that restocking is slower than expected. Also, with your Q1 volumes degrowing 6%, what are you targeting in terms of overall volume growth for FY18 and what will drive it?
So I think let's forget Q1. Obviously, I think Q1 was a disappointment. We could have perhaps managed it a little better. I mean, the GST impact on the stocking that happened in June. As things stand now, I think we are fairly confident of delivering an 8 to 10% growth for the balance of the year, which is Q2 to Q4. There has been a slow restocking, you are right, in July, but things are slowly coming back to normal. And I think we believe that GST over the long term is going to be very advantageous for the economy. It's good for the economy, good for consumers, and also good for organized players because it provides a level playing field. Obviously, there are some short-term hiccups in terms of in the distribution system and wholesale and some other things that are happening. But I think overall long-term things will settle down, and it's, as I said, it's good for everyone.
So, ballpark, what would you say? What would be a volume growth?
If we deliver 8 to 10% in India business over the balanced quarters, it should land up into 5 and 6 for the full year, maybe a little higher. It depends again.
Right. So what do you think is slowing the restocking process? What is it that your dealers and distributional personnel are indicating right now?
I think the significant impact happened in wholesale channel. I think wholesale channel, I think they have to get used to the new ways of doing business and obviously I think it was also, you know, for some in certain regions of the country it was more pronounced. I think people are adjusting with a new way of business. We believe that compliance levels will increase, there will be a new way of doing business. Having said that, I think what is going to happen long term with more compliant, you know, distribution or the channel system is that players with direct distribution, they should be much more focused on direct distribution, because that the arbitrage which was there versus wholesale, which was there to an extent perhaps because of the way the channel operated. In the new regime it can't operate in that kind of a situation. I think there would be far more impetus and a far more focus on direct distribution over the long term. Number two, I think there are obviously, even during the transition, there were some hiccups in the CSD channel, which is also now getting stabilized. There was some destocking by modern trade during the last fortnight of the quarter, that has got stabilized. So I think more or less things are coming back to normal except in wholesale. And I think as I said, that people have to reinvent ways of working, the channel has to reinvent ways of working. So I think organizations with much more direct distribution has to focus much more on expanding direct distribution also.
Saugata, you've also mentioned that the worst appears to be over in the Middle East and Egypt. What's the growth those geographies have posted in July and August? What's aiding growth coming in from overseas?
So I think we mentioned that the worst was over, but we will start getting growth in the second half of the year. That's because of two reasons. One is, as I said, that as far as the consumption pattern or the sluggishness that was there in the Middle East, it has flattened out. Obviously, when crude went to levels of 40 now, I think so you will get some natural growth there. As far as Egypt was concerned, there were two issues. One was the significant depreciation of the Egyptian currency that led to the decline. The second is the fact that there were inflation to the extent of 30 to 40%. That obviously, whenever there is a 30 to 40% inflation, and we are in that country, we are our main business is male grooming, which is not necessarily essential. This one, plus there's down trading happens when there's high inflation, especially food inflation. Again, the worst is over. So you would start seeing some growth in both these markets in the second half of the year. Having said that, those two markets contribute to only 3 to 3.5% of our business. That's not going to significantly impact in a larger way. I think the biggest thing is the fact that Bangladesh is back on track, and I think India business volume growth for the balance year should be, I think, at 8 to 10%. That should actually improve the things rather than the turnaround in Egypt. That will not significantly move the needle either way.
Right. Copra prices, you know, that's been a pain point for you, and considering that it's a key raw material, it's caused significant compression in your gross margins as well. However, you've refrained from price hikes, and you've said that you will stay away from the same in the second quarter as well. So how is this going to impact your margins, and why would you want to take this hit?
So I think the way to look at it, first focus to get the market stability back, get volumes back, and obviously we will look at the pricing once the volumes are back and stability is back. And yes, as I said, that for us, we don't look at short-term margins. For us, it's about long-term growth, it's about long-term market share, and I think once the growth stabilizes, we will take a look at the pricing.
Where would you, see the 4-5% pricing growth to come from? Would it be from price hikes or the premiumization of the portfolio? Because you've also cut Vaho as well as Saffola prices recently.
So what I mentioned was historically we've had a 4 to 6% inflation. Obviously, in the near term, inflation will be lower. Post the GST, we have also passed on some of the benefits to the consumers. So I think definitely a 4% over a long 3 to 5 year period, given that copra is cyclical and the fact that there would be some natural inflation will happen. Part of that, a significant part of that will be inflation based, and some will be through premiumization.
Right, and then there's, of course, Project One, which is, I'm sure, something very integral as part of your business plan. To increase direct reach and distribution, that's where the innovation lies. What's the investment that you're going to be putting in towards that?
So I think there are two parts to the project. One, I think the first part is if you look at our new portfolio and where I think we had a significant gap in distribution with respect to chemist, cosmetic and specialty food outlets, and that is where our new portfolio, whether it's male grooming, value added hair oils like hair fall or Saffola masala oats, is more likely to get distributed in. And that is something we are first plugging the gap. We started off with the first top 6 cities, we are now moving into the next set of cities. Having said that, I think we have to change gears on distribution even in direct reach elsewhere, because what has the new GST regime has necessitated the fact that the issue which has happened in the wholesale sector, that we need to now provide a fresh impetus to driving direct reach even in the balance set of outlets, whether it is in in a small set of towns or even rural, and that will now happen. So I think that needs a little bit of a recalibration which we will do between now and 2020, and I believe that there would be significant increase in direct distribution that is necessitated because of perhaps the change in the channel composition that is going to happen in a post GST era.
Right. So let's also talk about the new products that you're introducing. You've done so in Saffola. What is going to be the nature of the new launches, both in the super premium as well as the mass market that you're looking at?
Okay, without just getting into numbers, let me give you the broad themes in which we are investing. I think we believe there are top 5 themes in which we will get the growth from. The first one is what I call the premiumization of hair nourishment, which could be things like problem solving like hair fall and this one, and so therefore that is one area which is a theme there. The second one is bottom of pyramid, and it need not be sachet, it could be a 5 rupee or a 10 rupee price point, because sachets might not be the only way to grow in a category which is used little heavily. The third area which we are looking at is foods. Again, foods will focus only on in between meals healthy foods. The fourth is male grooming, and the fifth is some of the new things we are doing, and the new things could be a digital brand like a Beardo where we have invested. It could be some of the new things you will see in the next 5-6 months. These are basically Horizon 2 projects which we'll either do ourselves or we'll invest behind them, and then we will some of them will have the opportunity to become big. So these are the 5 big things that this will result in obviously reduction on dependence on some of our core, and I see these 5 will become significant drivers of growth over the next from 2017 to 2022.
Right. Can't help but ask you about Patanjali. That's been creeping into every product category right now. Would you say that their entry has been an irritant for you?
The way I think Patanjali has been the learning that how we can disrupt. The disruption can be like in oral care where it was a natural space, the disruption within pricing. I think what we need to do is for market leaders to continuously innovate and ensure that 2 things. One is you don't through pricing and ensure that there is you don't let somebody disrupt you there, or a certain benefit or a certain gap which you have in your product portfolio. As long that is there, I think there is enough growth opportunity in India, and I think as I said that Patanjali has had a fantastic growth kind of a trajectory. It has also given us a lot of learnings for a lot of in terms of how to ramp up quickly, how not to leave your efforts for disruption. So I think it's been a good learning for all of us.
Saugata, do you think Marico can get back to delivering the volumes and top line growth that it delivered in the past, and by when?
So I think the top line growth in double digits should happen. The volumes will take a little bit of time. I think if you really look at that growth of 2008 to 2012, it was led by 2 things. It was led by a significant premiumization and rural growth, both happened together. I think the sector also has to continuously innovate. I think if sometimes what has happened is if some of the dominant players focus only on sometimes if the innovation rate goes down, there is a focus only on margins rather than volumes, then the sector suffers. Having said that, I believe that there is a secular growth opportunity in the long term, both led by a revival of rural volumes and also urban in the form of increased premiumization. But I think there could be certain disruption opportunities. One could be in distribution. I believe there will be long-term distribution disruption opportunities in the sector. one could be through a digital brands, and organizations which are able to handle that better, disruption better or innovation better, are more likely to grow than other organizations.